Over 6 million Americans are now behind on their car payments, and it's getting worse. Many financed overpriced vehicles with long loan terms and high interest rates. 84 months has become super common, so most people are going that route, 72, 84 months on their auto loans. And so many people didn't even put money down, and now they're completely screwed. They owe more on the car than it's even worth, and they can't make their payments. The most delinquency since 2009. This is becoming a big issue because car dealerships sell everything on debt. It's not like most people are coming in paying cash. They're all taking out loans. So banks and credit unions are increasing their loan loss provisions, which is money they have to put aside for people that are not making their payments. They also have to make loan requirements more strict and underwriting more strict in order to get these loans approved, because they can't have people not making the payments on the loans they're giving out, which means less loans overall, and this means less cars sold. And that's what's happening. People are broke and they can't afford the cars they bought, and it's crazy what's going on. I mean, the average car payment on a new vehicle is over $749, and that's just the average, but a lot of times we will see $1,000 payments, and that's for 84 months, not even short loan terms. And I'm talking about a domestic manufacturers. You go to any one of them, Ford, Chevy, Dodge, Jeep, and Ram, you will see $100,000 vehicles. Matter of fact, it's almost at every dealership nowadays. They all have some sort of high trim level vehicle that's going to be well in the six figures. So it's just crazy that that's the car market we're in right now, where car payments are that high. 20% of them are at $1,000 payments. The average amount of negative equity on an auto loan is $6,754. That's just the average. They're owing that much more on the car, so they can't get out of it. They don't have a choice. And it got so much worse over the last few years because dealerships really took advantage of the low inventory. So most people that bought a car from 21 to 23, if they didn't put any money down or find the right kind of dealership, there was a high chance they paid over MSRP, or even if you were quote unquote lucky, you paid MSRP. That was the first time ever where dealerships were selling brand new vehicles for the actual asking price or over. It was crazy seeing Grand Cherokees go $10,000 over MSRP. I don't know why people were falling for it. And we still see some dealerships do it till today, but a lot of them are getting out of it because they learned customers can't do it anymore. Banks will not approve the loans on the loan to value ratio. They used to go 130, 120%. And they're fighting to find others because they have to keep rolling that negative equity. A lot of the customers that come in to purchase a car, they have negative equity, and it's all about rolling it into the next loan and the next loan, and this is just a constant cycle with a lot of consumers. But as creditors get much tighter on the loan approvals, how is it going to work with all that? Obviously, it's going to slow it down and make more denials, so they can't sell as many cars. And you have super high interest rate. If you go to your local Chevy dealership, their average rate at that dealership is probably in the 12% range. I mean, just think about that. Average loan percentages are 12, 13% in some cases. It's crazy because people buying cars right now, there's so many subprime. So 18, 19, 22% has become so common. And that is just a whole nother situation that's going on. So many of those vehicles that are subprime are going to wind back up on the lot as a repo. And the bank has to spend money getting the car repoed, getting it through the auction, selling it for pennies on the dollar. And so simply people cannot afford the vehicles they purchase. And now some dealerships are starting to offer little discounts here and there, but it's nowhere near enough. They're trying to attract buyers. I keep seeing this 90 days, no payment, and all these little things they try to do. No down payment and finance this $100,000 vehicle for 84 months. That's the only way they can realistically try to sell these vehicles, is try to find someone to sign the paper, because no one's willing to pull out the cash and actually pay for it because they're so dang expensive and they're just not worth the money. But with nearly $2 trillion of auto loan debt in the United States, I don't think it's going to stop anytime soon. But it's going to be a rough few years for a lot of dealerships, especially the ones that deal with a lot of subprime. All the domestics, they're going to have such a hard time. Anybody who bought a vehicle in the last 5 years, they're just so upside down, especially for the most that didn't put the down payments and that finance super long loan terms. And don't even get me started in the finance box where so many people got fully taken advantage of. They got thousands of dollars added onto their loan. of additional products that gave a no additional value to the actual vehicle. So they could have owed $7,000 less if they didn't buy any additional products and went to the right dealership. So it's just a bad situation in the car business with all these greedy dealerships running around. But now the banks are starting to say no because people aren't making their payments. Let me know what you guys think. Have a great day and stay blessed.